180,000. Property is how much? 140,000. Okay. Next, here they have said that in the point number 2, on June 6, they commence an item of plant and machinery under lease agreement with 3 annual payments, 29,000. The first payment is 31st May and charged to cost of that. The present value of the lease payments is how much? The present value of the lease payment is how much? 72,000. Is that this is the present value of the lease payment. When you have the present value of the lease payment, it is going to be called as right of use of asset. Is it right of use of asset? You are paying 72,000. 72,000 means you have the control over the asset to the extent of 72,000. Okay. Now, in the non-current assets, okay, in the non-current assets, you have to add another column, right of use of asset. Is it right of use of asset? Is it how much is the right of use of asset? It is 72,000. It is 72,000. Is it okay? Any doubt you ask me? Okay, given in the question. Okay, given in the question. Fine. Now, from this first you have to remove accumulated depreciation. Is that you have to remove accumulated depreciation. Accumulated depreciation for buildings, how much is there? For the buildings, 40,000 is there. Is that for the buildings, 40,000. And for the plant and machinery, how much? 48,600. Is that this is for the buildings 40,000 and here 48,600. Is that 48,600? Are you clear about this? This is with respect to this one is done on a straight line basis. Is a straight line method, whereas on the buildings is done on a straight line basis, whereas on plant and machinery they are doing on a reducing balance method. Is it right? At the rate of 20% return down value. Is it right? At the rate of 20% on return down value. Then you have to calculate what is the return down value. 140 minus 48,600. How much will be there? 400. 9 minus 1. 13 minus 4, 91. Check.
Yes.
Okay. This is the return down value. Okay. Now you calculate depreciation. Is it depreciation? Depreciation, what is the buildings? How many years? 30 years. Okay. Buildings 30 years. Fine. If you take the buildings, what will happen? How much is there? 180. 180 divided by 30 years. It comes to how much? 180 divided by 30. 180 divided by 30, how much will come?
6,000.
6,000. And this is at the rate of depreciation. Is that at the property and equipment? Is it right? Property and equipment at the rate of 20%. 91,000. 91,400 times 20%. How much?
18 to 80.
18 to 80. 18 to 80. Okay. Next. Whereas in the right of use of asset, how much is the depreciation? Point number 2.
Yes.
How much is the depreciation?
3 years?
No. The plant has estimated useful life of how many years?
6 years.
6 years. What is the present value is how much? 72,000. Is that present value is how much? 72,000. How much is the life? Here is the now right of use. Okay, I will put like this. This is for this one. Is it right? Right of use. Right of use. Okay, right of use. 72,000 divided by 6 years. 72,000 divided by 6 years. How much will get? Depreciation here 12,000. Are you okay about this?
Yes.
Land no depreciation 60,000. Is it right? Now buildings 180 40 140 minus 6 134. Check again. 91,400 minus 18,280. How much will get? 91,400 minus 18,280. It comes to how much? 73,120.
Yes.
72 minus 12. How much?
60,000.
73,120. Okay, 73,120, and it how much? 16,000. Okay, this is the total property, plant and equipment, including this is the closing value. This is the closing balance. Fine. How much is the depreciation? Calculate depreciation. How much we have calculated? 6,000 and 18,280 and 12,000. Is it right? 18,000, 1280 and 12,000. This is the depreciation we have to show. Is it right? 18,280, 6,000 and 12,000. Fine. Are you clear about this?
Yes, doctor.
Next, coming back to this, is that cost of, coming back to this, we have to calculate what? We have to calculate cost of sales. Is that working to? Is that cost of sales? Given, how much is there? Given in trial balance, how much cost of sales?
324,000.
324,000. Okay. Now you have to add, okay, depreciation. Is that depreciation on buildings? How much? Depreciation on buildings is 6,000. Depreciation on plant and equipment. Is it right? Depreciation on plant and equipment how much? 18,280. Is it right? 18,280. Okay. Next, depreciation on right of use of asset.
12,000.
Is it 12,000? Is it right? Depreciation and right of use of asset is 12,000. Now, see very carefully. First time we are doing this. Okay. They said that commence using an item of plant and machinery under lease agreement. Point number 2, with 3 annual payments of every year. How much they are paying annual payments? 29,000. 29,000. This will happen what? This will decrease the cost of sales. Okay. Cost, it affects cost of sales. Is it right? It affects cost of, means you are paying. Okay. You are paying your amount of, how much you are paying? You are paying a amount of 29,000. Okay. Less. Is that from here? Is that less? Lease payments. Is that lease payment? Is it right? Current year. Current year. How much you are paying lease? We are paying a lease payment of 29,000.
9.
How much? First understand, I know this is the point where you should ask me questions. Okay, you should ask me why we are doing this. Fine. Now, you have the cost of sale. Again, I am repeating. You have the cost of sales of 324. You have the depreciation. They say depreciation should be charged on cost of sales. is that they have mentioned very clearly in point number 1, all depreciation is charged to cost of sales. Is it? All depreciation should be charged to cost of sales. That is the reason we are showing all depreciation here. How much you will get the total here? 324 plus 6000 plus 18280 plus 12,000, is it, plus 12,000 minus, is it, plus 12,000 minus 29,000. How much you will get? 324 plus 6,000 plus 18,280. How much you will get?
331280.
331,280.
280.
Understand? I am concerned with only one. 331,280. You have understood all. I will tell you very clearly. I know where the students will find difficulty. You should know that this is the lease payment current year. Why we are deducting 29,000? Is it right? See what happens when you are when you are paying the lease, okay, it will have impact the, see, every year how much is there? The present value is how much? Present value is 72,000. Every year how much you are paying? Every year you are paying what? Every year you are paying how much? 29,000. See the things. If you are paying 29,000, what happens? The moment you pay 29,000, your liability will decrease. Okay, your liability will decrease. Your liability will decrease and your asset will also decreases. Okay, your liability will decreasing, your asset will also decreases. Is it? Your liability decreases, your asset. When your liability is decreasing, in lease payments, it has to be deducted from the cost of sales. Is it? It has to be deducted in cost of sales. It will have multiple effects. Is it right? It will have multiple effects. You have 72,000. We will calculate in the next stage. We will calculate the opening balance, what is the effective rate, what is the lease payment, and what is the closing balance. Okay, what is the closing balance? That is the reason we are deducting lease payments of current year only. These are lease payments of current year only. Are you clear about this cost of sales?
Yes, doctor.
Is it it? Next.
So, doctor, given the questions only for the first year, as the financial year.
Okay, fine. As financial, only for see what we are doing. We have to prepare for 31st March 2007, only for the first year. Only for 1 year.
Alright.
Okay, only for 1 year. Now, coming back to this, you should know what is the current liability and what is the non-current liability. Is that what is the current liability and what is the non-current liability? We are talking in terms of what? Lease. Okay. Yeah. Now I will ask you. You have to help me. Okay. 31 May 2007. Okay. 31st May 2008. Okay. Okay. 31. Now opening balance is how much? Opening balance is how much? Which one we have to take opening balance? Yes, Hussein. Opening balance, what we have to take? Initial amount. Here we have to identify with what?
Full amount.
Initial amount. Initial amount.
A loan.
Huh? Tell me fast. Before I reach to the first point. Here it is there. Here it is there. The lease liability initially measured at what? Present value. Is it? The initial liability will be always measured at present value. How much is the present value given in the question?
72.
72. 72. Rate of interest is how much? 10% on the opening balance.
10%.
It will come on how much? 7,200. Payment is how much they are making every year?
10%.
How much? Point number 2. Check.
29.
29,000.
Yeah.
Same rule. 1 plus column 1, 2, 3, 4, 2 plus 3 minus 4 equal to 5. How much you will get? How much you will get?
5,200.
5,200. Okay, 5,200. This will be the opening balance, 5,200. At the rate of 10%, how much? 5,020. How much you are paying? 29,000. Is that how much you are paying? 29,000. Okay. Okay, 20. What is the closing balance?
26,120.
How much? 26
26,120.
220. Okay. Are you clear about this?
Cost, right?
Yes, sir.
It's amortized cost, the closing balance.
Huh?
Closing balance, it's same amortized cost.
No problem. Okay, no problem. Okay. Are you clear about this?
Yes, doctor.
Okay. Now, we have done all. Nothing is there. Okay. It is nothing is there. Now we have to work out with the statement of profit or loss for the year ending 31st May 2007. Okay, 2007. Particulars, amount. Okay, first one by one. Revenue. Put one cross here. Okay, revenue. How much is the revenue? How much is the revenue? 630 minus cost of sales. Working to
3312.
working to
331280.
331280. How much you will get?
80.
331280. How much you will get? Fast.
298,720.
298,720.
720.
Next. This is also over. This is also over. Okay. Next. Distribution cost. Nothing is there straight away. Okay. Distribution cost. Distribution cost. How much is that distribution cost? 19,800. Put one cross mark here. Administration cost. $15,600. Is it okay?
Yes.
Total. How much you'll get? 298,720 minus 19,800
263.
minus 15,600. How much?
263, 320.
263, 320.
40.
This is
Profit from
okay.
operator.
Okay. Next, what we have to write?
Finance cost.
Finance cost. Little bit focus here. We are using the same method. Finance cost. How much is the trial balance? Interest paid is there. How much?
There is loan interest paid.
Loan interest paid. How much?
6,000.
6,800.
6,800.
Okay. Next,
6,800.
lease interest. Is it right? Leased interest. Working 3. How much we paid? Current year.
7,200.
Current year 7,200. Total comes to how much? 14,000. Check.
$40,000 will be profit after finance cost. 249, 320.
How much?
243,320.
243 or 249?
49, 320.
This is called as profit before tax.
Tax.
Is it? Income tax. See the thing, income tax, see the trial balance. Trade receivables, bank, ordinary shares, retained earnings. Point number 3, okay? How much is the income tax? Point number 3, note number 3. How much?
7,200.
7,200. We have to show in two places, okay? We have to show in two places. In a profit and loss account and as well as in the state current liabilities, okay? In the current liabilities.
Yeah.
Is it right? How much? 7,200. It comes to how much?
$242, 120.
242, 120.
Profit before.
Profit for the year.
Before, after tax.
After tax.
Yeah. Profit after tax.
Are you clear about this?
Yes.
As we progress, things will be easy. I'm telling you this. With some people are there, they will not take this. They will straight away jump to the questions. Never happens. Understand my point?
Yes.
Yes, Hussein, Sumaya, is it okay?
Yeah, Doctor.
Next. Can I start statement of financial position?
Yes, yes.
Yeah.
Anything, if you find anything, just tell me. I will stop. I will stop. I will pause for a while. Statement of financial position. I will not tell. You have to tell. Okay. As on 31st May 2007. Are you started doing on Excel, my dears?
Not yet, doctor.
You start today.
Yeah, on paper only we are revising. It takes time.
It will take time. Now
Yeah.
I am saying this. Only this. No family. Sorry. Family, friends, relax, study. Khalas. Okay. First family. I will tell this. First family is there. Don't compromise on that. First health, family, sleep. Then after that work. Sleep is very important. Non-current assets. Okay. Show everything separately. It will help you. Okay. Nothing will happen. Land 60,000. Nothing will happen. The more you show buildings. See left hand side. Is it? How much is there? 134.
Plant and machinery.
Okay. Plant and equipment. Is it? Plant and equipment. 73 120. Right of use. Is it? Right of use. 60,000. Nothing will happen. Okay. If you are showing separately, it will be easy for us. Okay. You don't do total. Okay. How much total is there?
327, 120.
120. Current assets. Next. How much is the current assets? See the things. We have done this. We have done this. This is over. Inventory. 31st May. Is that 31st May? Inventory. First you have to write inventory. How much is there? 19,600. Check again.
19. Yes,
Is it right?
19,600.
First you have to write inventory. How much is there? 19,600.
600.
Next. Trade receivables.
And receivables bank.
How much?
51,200.
51,200. Next. What is there?
Bank.
How
Bank.
much?
4,300.
Good. Total?
25,100.
How much?
25,100.
Total of this?
102, 220. Doctor.
400?
Two.
I have written 402 only. 1 minute, 1 minute. 1 minute.
402220.
Okay? Put
Yes.
put
Yeah.
two lines here.
Yes. Mm.
Next. Equity
Equity.
and liabilities.
Liability.
How much? Take slowly, don't rush, okay? Don't rush, take your time. Is that we have done trade receivables, we have done bank, okay? Ordinary shares. How much is the ordinary shares? 25,000.
25,000.
Okay.
Share premium.
Ordinary shares. How much? 25,000.
5,000.
Next, what is there?
Share premium.
How much is there? 7,000.
7,000. Return and earning.
Share premium. 7,000. Retain earnings.
In 500.
Huh?
15,500.
15,500. Current year profit. How much?
249,320.
242,120.
Okay, after tax, alright. Okay.
Ah,
Yeah.
242,120. How much you'll get?
188,620.
How much?
288,620.
288,620. This is total equity.
Equity.
Next,
Current liability.
non-current liabilities. Here, very careful. What we have done last time, you have to be focused on. Non-current liability. How much is there? Bank loan is there. How much is there? 20,000. It is there?
Okay. Yeah.
Little bit. Now, bank loan. How much? 20,000. Next.
Trade payables.
No, lease. Long term.
Current liability.
Lease how much? Long term. How much is the lease?
Lease 5,200 closing.
26 to 20. Is it right?
2008.
Yes. 26 to 20. Now we use the formula which we have used last time, which was little bit difficult to understand. Now I am telling you the shortcut. Okay. This is the non-current liability. How much is the non-current liability? 26 to 20. Okay. 26 to 20. Okay. If you take the total, how much will get? 46 to 20. Is it right? 46 to 20. Fine. Now, current liabilities. I will tell you shortcut now. Okay. Current liabilities. How much is the current liabilities? You have lease. Okay. Lease. Now, the rule says that total liability minus non-current liability is the current liability. Is it? The current liability, what is the formula? Total liability, year 1. Is it right? Total liability, year 1, at the end of year 1. How much is the total liability at the end of year 1? 15,220. Now,
200.
200, sorry, 15,200. Is it?
200.
Yeah. Next, closing balance year 2, how much? Closing balance year 2, how much? Closing balance year 2, how much? 26 220. How much you will get?
5022 502. 23980.
23980. Are you understanding now?
Yes.
Is it? First time when you have explained, you find lot of doubts. Now you see, the year 2 liability is the non-current liability. The difference between the year 1 and year 2 liability is the current liability. Okay? Are you clear, Hussein? Sumaya?
Yeah.
Trade payables. How much is the trade payables? Trade payables 35,200. It is there. Is it okay?
Yes.
Next, anything we have to write?
Trade payables.
Anything is missing?
Tax.
Good,
Tax.
good. Taxation. How much is the taxation?
7,200.
How much is the total? How much is the total?
6,380.
Huh?
66,380.
Total of these 1, 2, 3.
Right.
101,220. What is different?
Different.
101 to go.
How much?
101. Come here.
1,000 is showing different.
Yeah.
Anything.
$25,715,5 15. How much is retained earnings? 15,500. How much is the retained earnings?
Yes, 15.
15,
15,500, yes.
15,500. Two for now you do. You will change something will happen here. Check. $25,700.
Right.
25
Right.
7 15,500 242 242
5 7 5
how much? 25 plus 7 plus
2 8 1 second 2 8 9 6 20 2 8 9 6 20 5 not
check
Yes, doctor. 289620. Here the mistake.
Total how much?
Yeah. Total now tally 402220. Two eight nine six 20. Yeah. Doctor, before we move, I just want you to explain to me the working three, that lease.
Okay.
Where we find it in the questions?
Point number 3. Sorry, point number 2.
Point
Note
number,
2.
yeah. Lease.
Note 2.
Point.
What they said? Good. What they said? Can I read note 2?
Yes.
Is it visible to you?
No.
See, it is there now.
No, it's not moving.
No movement.
No.
It is there now.
Yes. Now it's gone.
Now,
Blank. Yeah.
see, you see point number
Yes.
2. Very simple, very straightforward. See, exam is not going to be this much. It's a very straightforward. June 1st, they have commenced using item of plant and equipment under lease agreement. Okay, with 3 annual installments, 29,000. The first payment when 31st May has been charged. See the thing, has been charged to cost of sales. That is the reason we have taken 29,000 in the cost of sales. Okay, that is the reason we have taken 29,000 cost. The present value of lease agreements are how much? 72,000. Are you okay? This is the present value. Under the lease, there is an option to extend the lease. They have the option. They have 6. How much life is there? 6 years. Negligible value at the year end. Now, first, when you are doing in working one, here, what you are doing? We are taking the present value of lease 72,000. From that, we have taken the depreciation. How we have calculated depreciation? We have calculated depreciation with 72,000 divided by how many years?
6 years.
Why we are taking 6 years? They have the option to extend the lease indefinitely at a reduced renting rate at the end of 3 years. They said that there is a condition that you can extend for a indefinite life. Indefinite life is, maximum life is how much?
6 years.
6 years. That is the reason we are taking divided by 6. Okay, that is the reason we are taking divided by 6. We have calculated depreciation 12,000. Fine. Is that how much is there? It will become 60,000. Okay, it will become how much? 60,000. Fine. Now, are you clear about this?
Yes.
Coming back to the point number, coming back to this. Okay, coming back to this. What they say, we have to take opening balance is the initial value is the present value.
Yes.
Multiply by interest 10%. Okay, multiply by interest 10%. Payment, how much you are making every year? 29,000. You will get the closing balance.
Yeah.
Are you clear about this?
Yes.
Now 50,200, 10% rate of interest, 29,000. Whatever the balance is left over, it is NCL. Then the total balance is going minus the NCL is the current liability. 3 years now. Whatever 3 years means, the life 50 50,200 minus 26,220 will be the closing balance at the end of year 3. It is
Of-
nothing but the current
Yes.
liability.
Yes, understood.
Is
So
it
they will be given in the question that 3 years, 2 years, 4 years, whatever, huh?
100% without giving? See,
Yeah.
any paper of ACCA, they will give you complete information. There is no doubt on that.
All right. Okay. Clear, doctor. Yeah.
There is no doubt. Okay, they will test you, but things will not be that. Are you clear about this?
Yes, doctor.
Fine. No. Yes, Hussein and Sumaya.
Correct.
Now, you tell me, understand, MCQ. An entity leases a computer with a legal life title of an asset passing after 2 years. The entity usually depreciates over 3 years. The entity also leases a machinery for 7 years, but legal title does not pass to the entity at the end of agreement. The entity usually depreciates machine for over 10 years. Over what period of time should the computer and machine should be depreciated? Listen carefully. A entity leases computer asset after passing. After computer is how much? Computer is going after passing 2 years. 2 years. Is it right? What is the life? Life is 3 years. Life is 3 years. Computer. Machine is how much? Machine. The machine is 7 years, but legal title passed on at the end of the agreement. Is it? How much is years? Machine is how much? Machine is 7 years. Now what they are asking, what should be the what period of time computer and machine should be depreciated?
Okay. Computer.
Tell me.
3 years and 7 years, right?
Why? What is that? See, actually, whenever you are depreciating over the life. Okay, you are depreciating over the life. We have done this. If you remember one problem, we have done 3 divided by 10. 3 years. We are taking lease for 3 years. Is that we are taking the lease for 3 years, but the life is how much?
Okay.
Life is
7 years.
10 years. Okay, whatever is there, see, the entire life will be depreciated. We are not going to be selective on that. Okay, we are not. There should be a reason when you are giving an answer that for that. There should be a reason. Means when the asset will be depreciated over entire life. Okay, if you are using for 3 years, then you will take for 3 years. If you are taking for 5 years, we will take for 5 years. But the rule is we cannot reduce the number of years. Answer is
See.
next. An entity leases motor vehicle. Present value is how much? 27,355. This is the opening balance. Okay, this is I am writing with short payment. Okay, opening balance. Now, the rate of implicit is how much? 10%. What is the rate of interest? 10%. The terms of lease is 3 annual payments. Beginning of the year. Is it right? Beginning of the year. Is it right? Now, beginning of the year. Fine. year, beginning of the year, okay, opening balance. Opening balance. How much is the opening balance? Opening balance is 27,355.
300.
Is it right?
Yeah.
Year 1. Opening beginning means first you have to deduct installment amount. First you have to deduct installment. You are paying in the beginning. Okay, you are paying in the beginning. Well, then what will happen? You will get the difference. Is it right? You will get the difference. How much is the difference? Is it? Difference is how much? 27,
17.
17, 355.
355.
Then you will calculate interest. Is it? Then you will calculate interest. 1736. Okay. Then you will have closing balance. Is it? Then you will have closing balance. How much is the closing balance you will have? $17,355 minus 1736. 15619. Is it clear to you?
Yeah.
If first we are paying in advance. Beginning of the year you are paying lease. Is it? Beginning of the second year. What they are saying at the end of each year. For how many years we are taking lease? We are having a 3 annual rentals.
For 3.
Okay, they are asking you to calculate the lease at the end of first year. Is it? At the end, what should be the lease? Okay, 15,619. 10,000 is the lease payment. It comes to 5,619. Check again. What is the total you have to have here? 17,355 plus 1736. How much you will get? 19091. Check.
Okay, 17355 minus 1736. 19091, yes.
$9091 times 10%, 909.
Yeah.
Okay, 9091 plus 909. It comes to how much? It almost comes to
10,000.
10,000 approximately.
10,000.
What is the answer?
$29,091.
Answer is
And library A.
answer is answer is I will go back. I know this is the first time you are doing. See, where is that? Where is that payment in advance, payment in arrears? The amount, the total on payments made in advance or arrears is represented balance outstanding immediately after the payment in year 2. Is that immediately after the payment in year 2? What is the immediately after the payment in year 2? How much is the advance? Immediately after payment in year 2, how much is there? Same rule. How much is there?
9091.
9091. Is it right? This is non-current liability. And difference between opening and non-current liability is how much?
10,000.
10,000. 9091 minus 9091. Current liability. It comes to how much? It comes to
10,000.
10,000. Just I am telling you with my experience, just focus on this, okay? That is the only critical area. Okay, this is the only criteria, and you will get perfection. You will get perfection by practice. Don't worry about that. The more we do, you will become expert. Inshallah. Okay? Is it okay, Hussein and Sumaya?
Yes, doctor.
Is it fine?
Yes, doctor.
Next. Tell me about this. It's very easy. You can tell your thought without my help. What is the low value goods? What is the limit? What is the limit of low value goods?
12 month.
5,000. IFRS lease permits a simplified treatment of certain assets. For which of the following lease would be simplified treatment not be permitted? Understand, point? It is not permitted. Tell me answer.
Option B.
See, this is what? See, this is greater than 5,000, but it is less than 12 months. It is permitted. It is value is less than 5,000, but period is greater than 12 months. It is permitted. Here the value is 5,000, more than 5,000, period is more than 12 months. It is not permitted. This is value is less than 5,000, but period is greater than 12 months
12 months.
permitted.
So option
C, yeah?
Okay.
Okay.
Next. On 1st April 2000, Chayan sells an item of plant to a finance company and leases it back for a period of 5 years. Lease and buyback. Okay, lease and buyback. At the end of the fair value, plant is estimated nil. Means they have sell an item plant to a finance company and lease it back for a period of 5 years. Is it? Lease and at the end of which of the following represent the correct accounting treatment of this transaction? Control transferred. Control has been transferred, yes or no? Sale, yes or no? Tell me. See, they have sell an item of plant to a finance company and lease it back for a period of 5 years. They have sold it, loan. They have taken it as a what? He has taken it as a loan. Okay, it has been taken it as a loan. Is it? It is representing what? It representing a loan. Here control has been transferred. What happened, Majid?
maybe has video connection.
Yes, what happened here?
But
Don't know.
Okay,
Actually.
okay, 1 minute. See, listen carefully. On April, Chan sells an item to a plant to a finance company and lease it back. Means he has taken a loan. He is not, ownership is not transferred. At the end, for 5 years, at the end of the fair value, at the end of which the fair value of the plant is estimated to be nil. Is it right? At the end of the year, at the end of life, it is going to be nil. Which of the following? Recognize the profit on disposal in the current year. Capitalize the new lease at the present value of payments. When it is a sale, it is going to be, he is selling to finance company. If he is selling to the finance company, it is going to be treated as a loan. It is going to be treated as a loan. It is not a sale. There is no present value of lease payments, liability, nothing is there. Is that if liability has to be there, lease payment has to be there. Spread the profit on disposal over 5 years. Capitalize new lease. Actually, the present value is not there. Is it right? The present value is not there. He is selling it to the, is it right? He is selling to the, it is nothing but, fine, it is, but nothing but lease back, okay? Buy and lease back, sale and lease back, okay? Now spread the profit on disposal of 5 years. When it is not a sale, when it is not a sale, it is a loan, profit will
Will not be
not arise. Okay, profit will not arise. Very good point of revision. Ignore the disposal. Treat the sale proceeds as financial liability. Treat the sale, because why it is take the sale? They are saying that it has been leased back over 5 years. It has been taken it as a loan.
And it is liability, yeah.
It is a liability, is it right? Revalue the plant to the value of the proceeds. Treat the sale proceeds. This is not sale proceeds. You cannot treat sale proceeds as a financial liability. No relation at all. Is it right? No relation at all. Every point you read it, you will understand 4 different points as such. Is that you will understand 4 different, means when you are selling it to a finance company, and it means like a lease, it is like a loan, is it right? You are pledging your asset and you are taking the amount, and any time you are dealing with the finance company, more or less it is going to be a loan arrangement.
Loan. Yeah.
Okay, it is going to be a loan arrangement. Fine. Next, please, can you do this?
Yeah.
CSA acquired a machinery via lease agreement 1/7. The lease was 20,000 payable in arrears at the end of the year. The present value of lease rentals is 80,000. Annual rate is 7.93. 2007. Okay, 2007. What are asking at the end of 2008, second year, what is non-current liability and what is current liability? Very interesting. Not only interesting, it makes sense for our understanding also. One 31/12/2007 opening balance. How much is the opening balance? Present value is 80,000. They are paying in arrears. If they pay arrears, you have to calculate interest first. Is it right? Interest at the rate of 7.93%. Okay, payment and closing balance. Fine. How much you will get? 7.93%. 80,000 times 7.93%.
6344.
6344. Payment, lease payments are how much? 20,000. Closing balance is how much? 86,334 minus 20. Check. 66,334. Six 66334 times 7.93%. How much you will get? 5260. 20,000. 66334 minus 344.
66344.
Okay.
For 6870.
5261. Okay. How much you'll get?
For 6870.
How much?
For 6870.
No.
6634.
51
Let's check again.
605.
5160. Yeah, 4.
Okay.
604.
31 12 209 51605 times 7.93 4092.2 4092 20,000 51605 plus 4092 minus 20,000, it comes to 25,697. Check.
Three five, yeah. 35697.
Now, which is non-current liability, which is current liability?
Six six three four four.
At the end of second year, at the end of year 2, is it right? This is 3 years, is it right? This is 3 years. This will become non-current liability. Okay,
Yeah.
this will become, and the difference between these two, how much is the difference?
14908.
Again,
51605 minus 3567. 15908.
is it clear?
Yes.
Little bit. Now you will get little bit, clarity will increase, okay? The clarity will increase. Is it okay about this?
What's the difference between Mr. in the previous questions? We were taking the non-current liability and direct the current liability. We are not minusing.
In financial instruments,
Yes.
financial instruments is there we are going to pay in the next 12 months. Here the rule is changing. Understand, man? Financial instruments rules is next 12 months. But here the rule is what? This is the rule. Okay? Keep it in mind. Whenever you will get a doubt, okay, you can ask me anytime. Okay? You can ask me anytime. But you have to be very clear about this one. Is that I will write here. Very, 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 very important. Okay? This is the rule. Here the rule is completely different. Okay? There the rule is completely different. Is it okay?
Mhm.
Fine?
Yeah, yeah.